Hello everyone. This isn't financial advice, this is just the way I'm looking at the market, but it's an interesting market at the moment. Those in the AG community will have probably seen that I actually took a trade yesterday. The bot didn't, because the bot is governed by long-term trends, and this was sort of a counter-trend trade, but I'll show that one quickly. Basically, it just took advantage of what we saw in the previous days' setups. So, interesting day. Where would I start? I'm going to start and have a quick look at the Nasdaq. So, looks like we got our first down day in a while, like proper down day where we've closed below the previous day. Well, that was a non-trading day, so we still actually haven't really closed below the proper previous close, but decent volume. Stochastic momentum's ticked to the downside of the signal line. Still very much in the bullish control zone though, so even if we sort of drop down and hit 19,200 say, and we hit that 20 moving average on the daily, probably come back into here, to be honest, if it was going to come in anywhere. Even if we hit that, it's still going to probably be quite high in terms of stochastic momentum, and it could just be a quick correction and then continuation, as we've sort of been saying, into the election. But that's an interesting sign, because I mean, Bitcoin obviously preempted this, like it did with the bottoming of the market last time. I mean, this doesn't mean we're pulling back at the moment, but given the volume that we have got coming through, it does look more like a reasonable pullback level. The S&P 500, it's pretty similar. Yeah, very similar really. And as you can see, we've still got this global liquidity. The orange line is still pulling back. So that is a fair indication that this is probably going to be a decent pullback, just because that tends to, when we get that separation, as we've mentioned before, when global liquidity sort of leads the S&P 500 in terms of the drop off, or even just goes sideways while S&P 500 is going up, you get that disconnect, and you tend to get a decent correction after that. So we would be looking for the global liquidity to sort of tick back up again around the levels that we're talking about here. I just wanted to see, I was trying to open Max Pain today, but for whatever reason Max Pain seems to be broken, which is interesting. It doesn't get the spinning wheel of death on the SPX ticker on Max Pain. Don't know why. Anyway, what I did want to have a look at is the net flow on Bitcoin. So it's been pretty flat the last few days, or that's the last few weeks. So pretty well, if there's a day or two where they hold on to their Bitcoin for a bit longer, they tend to sell off in a big way. So just keep that in mind. The miners are still sort of selling the rips at the moment. Yeah, we need today's data really. This is incomplete, but just interesting that they seem to hold on to it a bit during the little pump today. Alright. Fuck, I wish Max Payne was working. That's annoying. Anyway, that'll give us an idea of where the market might move into tomorrow's options expiry. But again, it's not 100%, but it's sort of one of the reasons why I thought we might get a bit of a correction here. IWM still struggling. Equal weight S&P 500 is actually ticked up, which is a little bit surprising. Could just mean that money's kind of moving around the sectors a little bit, rather than just being concentrated in the top couple. Which, again, probably not unreasonable to assume. XLI's up a little bit. XLY, XLP hasn't really dropped off too much, so it's holding at the moment. If we see that start to drop, then if S&P 500 hasn't actually dropped a reasonable amount, then that would suggest that there's probably going to be a bigger correction on the horizon. DJI Gold is still struggling. Let's have a look at Dixie. Dixie's pushing higher again. Seems to be held within this channel at the moment, so if we get a break out of that channel, that will be it's probably going to happen if the stock market drops off, I would say. VIX, a little bit of a spike in the VIX, still nothing to really write home about. TLT is up, well, yeah, it's still trending up. Bonds are coming back down again, so we've sort of hit this resistance level again, and they're coming down. HYG looks like it's hitting resistance on that as well. Again, it's just sideways on bonds. Really, they're not bouncing around too much at all. Skew has been crushed. So again, this was another early sign that we were nearing the end of the run on the S&P 500. So this is definitely a good chart to have on your watch list. And it's coming quite quickly down into levels where we've seen bounces before. So yeah, I wouldn't be picking a bottom until we actually saw the skew jump back up a little bit. Skew actually seems slow on that. It's quick on the down turns, but slow on the moves up. Anyway, copper up a little bit. Yeah. So copper's an interesting one. It tends to go up when the market's going up, or preceding market going up, just because it's a economic health indicator, but it's kind of doing the opposite at the moment. It's already had its run down. So it looks like the money might be moving into the mineral sector, because gold's pumped a little as well. Silver's pumped a little. Silver's been a good trade. These sort of breakouts back here were great. Great breakouts. All All right. We will have a quick look at the money supply. It's down a little bit. Brazilian dollar might have broken that level that we thought would be. I don't know. Still sort of coming into these candles there. That one's for you, Joshua. Yield curve still inflated. Investors are still wanting short-term debt over long-term debt. So, yeah, interesting. We're ticked down here, but you know we've seen it come down from these levels before, and it barely made a dent in it. So, no real change there because I mean yields are going up. It's just interesting. We have actually had a bigger sort of candle on the US 10-year. Saw the other day there's a Japanese firm that's selling $60 billion worth of US bonds, I think it was. What do we got? Percentage of stocks above the 50-day average. So that's kind of still downtrending. But it's interesting that it has picked up from yesterday, or the lows of the day before yesterday. So that is an interesting level. I'd still be looking for this to come back in, but it just kind of agrees with the whole money moving out of some of the big guys that are controlling the S&P 500 and the Nasdaq into some of the smaller players, or at least other sectors. So yeah, global liquidity is down. Mag 7 looks like it's rolling over, at least for the short term. You'd be looking for it to come back and at least hit this level here. Alright, this total crypto market cap is still struggling. Let's look at okay. So this dip is finally getting bought up. So again, I think we're probably coming pretty close to the end of this dip for Bitcoin. Well, maybe not the end, but I don't think we're going to sort of clear the levels that we've set as sort of our key levels for a bounce. So obviously we're still bouncing off this trend line here at the moment. We haven't sort of broken below that. And look, the trend line's kind of arbitrary, but until we get some clear movement, can't really be confident that it's going to actually come all the way down. But it is still holding. Actually, shit, no, we've broken below the pi cycle indicator. Interesting. That's the first time we've broken below that level since sort of this period here. As you can see, when it breaks below, it tends to stay below there for a little bit. Again, took a little bit to recover there. Didn't break there. I mean, this was terrible. I'm not expecting this sort of amount of time below it. But actually, what I might do is I'll have a quick look at. Let's go to the start of the last bull. We didn't really see it apart from that COVID crash. I think the halving. When was the halving? Halving was around here, I think. So after the halving, I don't think we actually dropped off. Just gonna have a quick look. Wow, my internet isn't working very quickly. We got May 11th, 2020. Should know that by now. I've had to look that up so many times. So yeah, we didn't actually break below the lower band of the pi cycle indicator after the halving last time. We tested it quite heavily at that point, but we broke above. So that is interesting because it's just another. It just points to the fact that we're in a bit of a different environment now to what we were in previous cycles. I think ETFs are, and the fact that Wall Street is more involved is probably a fair bit to do with that. All right. So again, stochastic momentum still hasn't turned to the upside, and it doesn't look like it will today. Just it seems that Bitcoin had a bit of a pump and dump. The levels that we were looking at yesterday, which was sort of this the 50 EMA level. I didn't have the pi cycle indicator on there, but that's an interesting sort of level for it to retrace to, and then just ripped back down to the downside. What I'll do is I'll just have a look at what happened yesterday. So just turn that off. So this is a pretty good little trade setup here. I actually had some indicators that were kind of posturing towards the upside around this point here, and when you look at it, we had, what I'll do is I'll just go to the replay tool. I was starting to look at it around here. Whoops. I'm going to replay. Select that. Sorry, struggling. So when we look at this sort of setup, I'll actually turn that on. Sorry. Okay, so I had, like, the long-term trend was down, but the short-term trend was kind of ticking to the upside, and we still had a decent amount of volatility in there, and volume was rising. So after this candle, we actually it's gone too quick for what I thought. So after this candle, we ticked to the upside, and we had good volume, green vector candle, broke above this little level. So at that point, I basically said, well, okay, what we want to see is we want to see a breakout of this level. So we actually form essentially a W formation. Shout out to Traders Reality. And then the expectation on this, when you got, this isn't even necessarily divergence, because at least not on the CCI, it was trending the same way, but there was certainly divergence. No, there wasn't. Don't worry. Scratch that. Anyway, so with this, you kind of want to see a breakout. So the fact that this W formation, the second bottom, is higher than the first. You got good volume coming in. It breaks out. You want to see a retest of that level, and then a move higher. So in that case, I just set a trade to get in at around this level. It actually, I think it got in around 65.80 or 0.80-ish. And because we actually have some pretty good structure in the near past, you can look at this and say, well, okay, there's going to probably be some resistance at least around this level. And you can also say, well, there's probably going to be some resistance up around here as well. I didn't actually go that far though, and this is where the vector candles can be useful, because we've got sort of the vector candle back here. There's not a lot above that. Most of the vectors before that have actually been recovered. So a lot of people seeing the breakout potentially would have thought it's okay, this is the resistance, and that's where they would have put their take profits if they were trading that. But I actually put mine down here somewhere, and we actually hit, just going to show Bollinger Bands. I mean, amazing. We actually hit the 800 EMA. So this is sort of what I was looking at, and that's why I took that as my final take profit. I actually took 25% of the trade off the table at this point here. So as you can see, it play out, came in, hit my entry, and that was just a nice move to the upside. I was watching this ATR band quite closely, and I actually ended up sort of taking profit. That was about bedtime then. I took profit just towards the top of that candle, just because I wasn't certain it was going up there and I wanted to go to bed. I didn't want to leave too much money on the table because I wasn't sure that we were going to get continuation, just based on the fact that we would have had to have ripped straight through the 800 EMA. That would have been a big move on the daily, and I just, given that we were expecting the S&P 500 to come down as well, it would have been risky to leave that to keep going. So yeah, just make sure you pay yourself if things are going in your favor, and just be wary of the levels that are actually critical. So where are we at now? I'm just going to get rid of the replay. Wait a minute. Get rid of the replay. Yes. So basically we've come straight back into this level from the original breakout. And there's, to be honest, this isn't really something where I would take a trade. Long term, bloody CCI took a really sharp turn there. You don't normally get it making moves that big, just in one time frame. So to me, this is leaning more towards the downside still on the shorter time frames and on the long time frames. We're still in no man's land for this long time frame. I'd like to see it still hit the bottom of this Gaussian channel. I think that will potentially pull it up, but again, it depends on a whole host of things, including just how the general market is. So there's still money floating around. I think this will just be a shorter correction. But yeah, I am expecting Bitcoin to come down more into this level, potentially hit this trend line as well, which would see it recover this, essentially this vector candle here. But looking for sort of ticks above on the stochastic momentum in particular. Again, not huge volume today, but you kind of expect that with, you know, a lot of action on the S&P and the Nasdaq and into that options. But grow, not bad. So yeah, downside is still more likely at the moment. In terms of the turnaround point, I think it would be good to see it come back up here to the 200. You got the 50 EMA there as well. You got the top of this Bollinger Band, which isn't a standard Bollinger Band, so it's not one that a lot of people would have on their charts, but it's certainly confluence for myself. So yeah, it would make sense for it to come back up. It would be great if we got the CCI back up above 0 during that, because then we probably would get a trade to the downside on the bot. But I don't know that will happen, to be honest. Just have to wait and see, but it's certainly not a tradable position for myself at the moment. Realistically, you probably had a little W formation here and we've kind of retested it, so yeah, maybe it could actually go back up into this level again before going further to the downside. Bitcoin doesn't like leaving liquidity before it makes big moves, so the fact that we have come up and taken a lot of liquidity out here from some shorts and then rip back down, it's probably going to mean continuation. But yeah, we could be looking at a bigger W formation as well. It's kind of broken that. I mean, you could look at it like that, but it's not a great formation at the moment for my eyes anyway. Okay, no requests in the chat. Hey Brian, how you going? Yeah, happy trading. Hopefully we get a bottom on this thing soon. We can rip to all-time highs because the market's pretty flat at the moment. Everyone's holding onto their freaking TGEs until Bitcoin starts going up, which is kind of funny because everyone's liquidity is locked up in TGEs, so it's preventing them from putting it into crypto. Anyway, have a good one, guys.